Good day. Ira Epstein with your financial market wrap-up, and this is for Wednesday, and we are sitting here now on February 19th, 2020, just getting on to 4:10 p.m. Central Time. You know, if we take a look at what's going on, another update in the stock markets, it doesn't matter if Nike, Adidas, Tyson Foods, whoever says, hey, I'm having issues because of coronavirus, the stores aren't making sales, our Chinese exports, or to them for foods, be it sales in China for shoes. The market's looking all beyond that, and it's saying to itself, this is not going to be the event that we keep hearing about. Doesn't mean it's right or wrong. I'm telling you what the market's doing, and you're seeing the run into that. Now, today we saw a little bit of a sell-off in the bonds and notes. I didn't see anything in the FOMC statement that should have caused that. I saw that we continued with the run in the energy markets. I'm a little nervous that they're getting ahead of themselves. They got too cheap. They're going to get probably a little bit overdone here. That's my interpretation of the chart. And as I'm looking at what's going on in the metals, still a market that's on fire. Now that you're up here to 1,600, I heard on TV my first calls of $2,000 an ounce. That's how it always goes. All right. If we look at the S&P, an all-time high close still for the week so far, with the market up 6 points. You would think the market's been up more than that for the week, but we're only at Wednesday. It feels, remember we didn't have Monday trading per se, but it's still another 6-point gain. You can see the labored move the market's been having. Now, yesterday's high in this market was a 33.92.5. Today we got up over that high. So it's important to note that you had an outside day down yesterday and you took out that day's high, which takes away the impact of that and could set off another reaction to the upside if the market wants to add to this. Why? I'll get to that in a moment. You've got a pattern of higher lows as measured by the swing line and higher highs. That's bullish. The market is over the 18-day average, which is now climbed enough that even if you had a break, it's going to be above the last break low. So I'm not saying you can't take that out. I'm saying it would take a pretty large break to get to it, and you'd have to go through some key support. The resistance in the market keeps climbing away from the market. So even though you're up today, not an awful lot one way or the other, 17 points, and you certainly didn't clear yesterday's high by a lot, you did clear it, and therefore my theory is when you take out the high of an outside day down, you've laid what's called a trap for those that were bearish at that moment. If you catch them, one of the objectives could be the upper Bollinger Band, wherever that comes in tomorrow. So something I'd be watching. Now to catch the bulls here, you'd have to take out the lows of yesterday to throw that whack out. But right now that's what I'm seeing, and I have the embedded reading. So I see the bulls in control. They've caught those bears yesterday that were hoping for that outside day down, maybe to push the market lower, and they've got the embedded reading and bullish bias. NASDAQ didn't have that chart pattern. What NASDAQ had yesterday was an outside day up. It's following through. It's got the bullish embedded reading. Remember, when you have a bullish embedded reading, it overrides the other chart patterns. Until that's lost, really the chart patterns up here don't mean an awful lot to me. I just watch that, and I'm looking for buys on pullbacks in the market by the pros still looking to push up towards that upper Bollinger Band. As we look at the Dow today, if we look at the action, both numbers were over 80. I'll look at it right here. It'll be easier for you. Then over 80 again yesterday, the day before. You've got your embedded readings. So until that's lost with the red number under 80, I'm looking for higher prices. If it drops back under 80, then and only then will I be looking for prices to pull back to the 18-day average. If you had a substantial break, it can go anywhere, but haven't been able to do that yet. The Russell is still the market without the embedded reading. It's just overbought and no trend. It's got a lower low, higher high. Admittedly, it has found support on pullbacks to the 18-day average. Admittedly, everything around it is bullish. It's very hard to be bearish it because of that reason, but I don't see a reason in this market that the bulls are getting involved or the bears. In the cash VIX, yesterday we went up, as you'll recall, got up to the upper 18-day average, my line in the sand. And what I said then, I'm going to repeat. It now appears that you're caught between the 100-day average and the 18, and as you can see, you pulled back today and challenged that number. Do we have a pattern here? We don't. You have a lower low and a higher high in an oversold market. Don't see an awful lot here. What I think is going to happen is your two Bollinger Bands are going to come rushing in at the market. In the T-bond market, you've got flat momentum. You have bias up because you're over the 18-day average, a pattern of higher lows, higher highs. If the market rallies further, wherever this Bollinger Band comes in tomorrow, I'd look for resistance. And if you were to take out 161.26, you'd cause this trend to go away. There'd be no trend. You'd have a higher high, lower low. In the 10-year note, very similar pattern. You've got the higher lows. You're holding the 18-day average. If you can clear the highs of yesterday, wherever the Bollinger Band comes in, I'd look for resistance. If you take out 130.23, I then think the market's leaving this particular uptrend. You'd have a higher high, lower low, probably go back into a consolidation or some other phase in the market. The dollar index is the never-ending bull market. We haven't heard President Trump yet say anything about it. Are you noticing that? I don't know what he can say because you can't talk it down. And it's not that interest rates aren't low. The Fed is not even doing that. The market's ahead of the Fed. And it just keeps climbing because of coronavirus, and we're the place to be. Eurocurrency got a little bit of a bounce today, not enough to write home about. The market's embedded. The first hard rally in the market is likely, as a chart technician, to get sold. If the red line closes back over 20, then I'd say this long break, similar to what the coffee market did, would be maybe coming to an end. But you are hitting multi-year lows on this. What a great time to go to Europe, right? If it weren't for the winter, you'd want to run there. In the yen, oh my. This market fell apart today. I mean, you talk about a market that said, I don't need safe haven buying. Whoa. This is really some break in the marketplace. And you've had the pattern of lower highs, lower lows. This, I think, caught a lot of us by surprise. The size of that break, 140 points today. I did not see that coming. It's recession talk, it's lack of tourism, it's coronavirus, all hitting at one time, fearful that the economy there, they've already had no inflation, it's going to probably get worse. I can go on and on with what the talk is. But this is a breakout of this market. You haven't done anything like this to the downside. I can't find it on the chart. So quite extensive. The good news is you've been under the 18-day average. The bias has been down. The trend's been down. This is the first challenge of the lower Bollinger Band. You went through it by about 50 points, but I wouldn't be surprised if you try to pull back in it soon. In the Bitcoin, you turn the trend of the market, in the swing line down. The bias is up, though. Remember, you're still over the 18-day average. And we've been warning, since you lost this embedded reading, here it was embedded, you went all of a sudden at one time to that 18-day average. It's rare you do that, but you did. That caused a lower low, higher high pattern. You had people that tried to take advantage today, and it's just all over the board. I'm looking for consolidation, but remember, this market's pricing in that halving event that's going to take place, I think it's May 18th, where all of a sudden the same computers that are cranking out X Bitcoin, that factor goes down by, I think, 50%. So you can throw everything you want at it. There's a limited number that you're going to get, and people are looking at that. Plus, this market's probably looking at gold, and people think this is something of a safe haven. I'm not arguing if it is or isn't. I'm just telling you what some people think. So you get that. Then you get to the Brent versus WTI. Well, obviously, 350 is too cheap. The market just told us that. Is 563 going to be too expensive? We're right back up where the market was. And this all happened in, a week? I mean, that's pretty rather dramatic in the marketplace. This market, if the spread's widening, they're saying that they want Brent, that there's a premium coming back in the Brent. Remember I mentioned to you that the teapot, you know what that is? Those are the independent refiners in China. About a week ago, they were buying up cargoes that were sitting off the mainland. They see something that we don't necessarily see, but the demand came back in with that. Now, in looking at this vertical price rise that you've had in the market, I see stiff resistance in the 60-40 level, the 100-day average to the upper Bollinger Band of 60.51. I still have that lower low, higher high because you've come $6 straight up. It's called a vertical price rise. You're in overbought territory. I'm looking for resistance at that point. In WTI crude, a little different picture, bullish. Higher lows, higher highs, momentum pointing still up, not yet overbought. Oh yes, it is, 71 reading. You are overbought. And you can see the 54.48 level. That's where you've got a resistance from the first Bollinger Band. So I think the pros will pay attention to that. It's interesting today too. If you look at yesterday, we had an outside day down. You take out the high of an outside day down, like I said earlier, it's not uncommon. You look for the closest of a key moving average or the Bollinger Band. Because the Bollinger Band's under that, it's the Bollinger Band that I'm looking at. In the gasoline, let's back off right here. I'm looking here at resistance at the Bollinger Band coming in and the 100-day average. But it's obviously the Bollinger Band. You had an outside day up. You went to the combination of the two and you got thrown back at the end. Not by a lot, but you got somewhat thrown back. You're settled right into that. I'd be surprised if people aren't taking money off the table. And the only thing that surprised me on this whole chart was that coronavirus threw this market and took out this low. I didn't expect that low to be made. I thought you'd come down and hold like that and be coming back up with that seasonal that I talked about. I think the market's told you that in the U.S., gasoline's going to be in demand now for the spring season. Natural gas, two cold fronts. We're in one in Chicago now. You got another one right behind it. We'll see what the market does. It's hit its upside targets. It's in an uptrend, but overbought. Now the question is, this whole area, is it a base or is this going to be tested down the road? Can't answer it because the bulls have control right now. Want to remind you about my guide to technical indicators. Because if you watch this, you should be looking at all these. Because what it is, it's two brochures that were put together by our good friends at Modern Trader. And it talks about the different techniques and indicators that a lot of traders use. It touches on most of the important ones. So if you're looking for a tutorial, a short one with pictures, great explanation, we've got them. And this is what they look like. It's free to you. Just simply go to our website at www.iraepstein.com. Go to the free offers, bottom right of the page. You've got it there. You can click up here. If you're watching me on YouTube, it'll take you there. And sign up for the other offers that you might want. I'm Ira. See you tomorrow.